Hi ladies and gentlemen, my name is Edgar Rafondani and today is 8th of July 2018. It's 7:58 p.m. here in United Kingdom, and the market, as you can see, so it's already started. So we're talking about the Hong Kong time zone now. The markets are open there. Hi there, anyone from Asia, Hong Kong, start trading right now. So you can see the ticker started tweaking around. But anyways, let's not get distracted and get on to the business. First and foremost, I just want to point out that thank you guys for tuning in to my YouTube channel. Plus, if you want to learn more about trading, just email me through my YouTube. Just comment down below. Plus, you can get a book on Amazon for a bit cheaper price, so value for money, and around 10 pounds at the moment. Can help you to teaches you the best trading strategies out there. But let me stop chanting about that. I'm not trying to do any marketing here. I'm just trying to help you guys. And let's crack on to the market. Now, starting off with the economic themes, there isn't much going on so far apart from the trade wars, so let's keep that aside, and I'm going to jump straight forward to the technical analysis. Now, look at the charts here, so beautiful. I can tell you guys, this week there are so many gaps, so many opportunities than ever before. The market has entered some really significant levels, some really significant positions where we can leverage ourselves and make really good return. Now, my new system from last time onwards, is I'm going to start analyzing the dollar index to give me that kind of perspectiveness before I enter any trade and be confident that I'm doing the right thing. Now, looking at the dollar currency index right now, if you remember guys, last week non-farm payroll was a bit negative. I mean, it was positive, but the economic growth, the unemployment rate kind of rose a little bit, so that was bad for the dollar. Anyways, I won't talk much about that. You guys can just go and do your own research. So the price broke this support level and entered this new zone. Now, when that happened, it creates a lot of volume and momentum towards downward, and you can see there's a very beautiful respected downward trend on this pair. So if you go deeper into lower time frames, you tend to see the market reaction. The market has been trying to bounce back to this significant level, and now it keeps on showing red. So this is a key significant storytelling about this pair, about this index currency. Keeps on going south. So my bias for this coming week is gonna be sell any US dollar base pair. Now, jumping to oil. Oil is another thing I like to look at as second most important ingredient in my trading is crude oil. Now, why? Because crude oil affects a lot of economies, hence affects currency in several countries. One good example might be Canadian dollar. Canadian dollar is highly affected. It's almost, I would say, pegged, but it's not pegged, but it kind of acts simultaneously and has a positive correlation, a negative correlation with the oil. When the oil appreciates, the Canadian dollar depreciates. No, Jesus. when the crude oil appreciates, the Canadian dollar appreciates as well, so that they have a positive correlation between them. So they carry one another, both sideways, better or worse. So the US oil has bounced back to this key resistance level, and as you can see from our weekly analysis, that this is a very, very significant level. It's a very powerful, significant level, and for all to do this kind of reversal here and keeps on going up, gives us a significant outlook that Canadian dollar is gonna be one of the strongest pair in the coming week. Now, if that's the case, first trade I'm going to look at really keenly is gonna be US Canadian dollar. And why is that? It's because of oil is stronger and the US index is weaker. So guys, think like this. Now between this currency in this place, US dollar, Canadian has more strength for this coming week. Now what did I tell you? I'm gonna short this market for this coming week. Absolutely, I'm gonna short it. As you can see, I have two red candles here, and it gives us a very strong point of view on the direction of the market for the coming week. Now, as you can see, it has already broke this moving average here. It's trying to break this key significant level. But if you go to much deeper intraday, the prices keeps trying to break this significant one, yet it kind of faces a lot of resistance out there. So yeah, for this coming week, this is one of the key trade I'm looking at. I'm gonna short this 100%. I'm gonna short this trade. The way I see it is, if you look at it, if you take a Fibonacci retracement, look at that. Sweet. I'm looking at this key significant level, the price to come and to reverse from here. If you look at that, so that's a lot of casing points from the historical prices. So this is, I'll go down here. It's more significant, 0.618. Now I'm looking for further price action towards down here. So let me just draw for you guys, for you to easily see. So I expect the price to come to down here. Anyways, it's always wasting time. I just want to jump to another currency. Another currency is US Japanese yen. This trade, I don't want to trade it because it's a bit choppy, because both of these currency have imbalance about them. No one shows a significant weakness than the other, so it's quite hard to trade this pair. But one thing for sure I know is we have reached key significant levels here. If you look at this long, almost 1.5 trend line, downward trend line, has rejected the further upward movement of this pair. Plus, there's this horizontal key significant resistance level trying to resist the further upward movement of the price. Now, the way I see it is going to go further down, maybe up to this level here. This is a target price of 110.009, or further downward. But yeah, let's see what's going to happen for the coming week. EURUSD. Oh yeah, this is what I spoke about last week. You saw the double bottom here, triple bottom here for the past month, and I say that the price is gonna retrace here, come back, and try to find the momentum upward to this key level, the red line here. So I'm expecting the further price action towards upward to this key significant target, 1.20067, for this coming week. So plus, remember, the US currency index has shown significant weakness. So yeah, it gives me strength, it gives me positivity on entering this market. Plus, the risk reward ratio here is really good so far. If you put our risk reward, when we enter long on this market, this is what it's gonna expect. So if my target is gonna be there, and my stop loss is gonna be, oh come on, sorry for Oopsie. There. See guys? So we're expecting a risk reward of 2. Perfect. Risk reward of 2. So my bias, the forecast for this coming week is a long for this market for me. And let's see what's gonna happen. Euro Japanese yen. Do I see this? Alright, the price has broken this key significant downward trend and will enter this new territory, and yet the price keeps on going up, trying to break this horizontal resistance line. Now I expect is the price to go further up here. If you remember guys, last week I said about this, that we're going to expect a further movement to this key resistance line of 131.3399 and a further downward trend. But the way I see it is I'm gonna wait for a retest to enter this market for this coming week, and that's quite important because I'm a bit late, so I don't want to jump in this market and to be caught in a gray zone, an area of nowhere, and make a massive loss. Furthermore, alright, this this trade is very interesting because it has two sides. On a short-term basis, it has a sell bias based on what? Price action. Like I said since last week, the price will come here and bounce back and start to retest this 1264.23 and go further down. Now the price is doing the thing, is respecting my analysis, and that's good. But if you look at the longer, and this I just realized this yesterday, if you look at the longer time frame, look at that. Since 2016, the price has bounced back to that upward trend. Now this is really powerful. In any technical analysis, guys, the first thing and foremost you have to look at is not the first thing, but it's the most important. If the price respects that trend line, the longer trend line, the long-term trend line, you should respect it, because the price has been really respectful of this trend since 2016 January, and it's back again here. And if you look much closer, you can see the buyers are coming into this pair, into buyers are coming in buying gold. And another thing, secondly, which is most important, is the dollar. The dollar weakness gives us even more confidence of buying gold for this coming week. But as I say, let the sales coming in, but we are going to buy this market around, probably I look at it during maybe roughly it's gonna be Tuesday or Wednesday. The price is going to retrace back, so I'm looking at a further retest. The price is going to come down to 0.5, then a further upward continuation, the price action. So thank you guys. Am I done? I think so, yeah. Alright, let's see. Oh, I'm making a profit there, 200,000. Sorry, I wish that was my real money, you know. Yeah, that's not my real money. Actually, that what happened there is I've been trying different strategies. So it's something called strategy test in this platform, where it triggers if the strategy happens. I mean, if the price reflects your strategy. So yeah, it's working. It's getting good. So anyways, guys, thank you so much for undivided attention, and trade really wisely for this coming week. Remember, it's not about making profit, it's about protecting your capital. That's the most important thing about any trade. You need to be in this game for a very long time. You're not here just for a short time, make money and leave. You're here to stay. You're here to be an investor. So thank you so much, guys, and have a great day. Peace.